Hi everyone, welcome back to the channel. In today's video I'll be going over my Freetrade stock portfolio update. Before getting into the video guys, if you're new to the channel, welcome. I'll talk about investing and personal finance. So definitely consider subscribing if you're new here and haven't checked out my content before, if you're into all things investing. So yeah, we'll get that out of the way guys. And so yeah, I'm just basically going over my Freetrade stock portfolio, and it's been an interesting week or so. I think it's been about 10 days since I performed my last update, so I thought it'd be time to just go through, as it is earnings season, so I'll be going over a few stocks in a bit more depth, and also generally going over all the stocks in my portfolio, just showing you how they've performed over the last week or so. So as you can see, the portfolio currently stands at £3,602.34. We are down a little bit over the last in the last month overall. It's been quite volatile anyway, but there's obviously more economic uncertainty in the stock market. It's obviously led to its downfall. You can see we started the month £3,698, a dip to £3,640, they made a rise all the way up to around £3,790, almost at the 380 mark, which we've not been for a while. But since then, pretty much it's been into decline. Obviously, US stocks have struggled as the economy over there has shrunk by quite a large margin. And obviously with earnings reports, some companies are doing worse than others, and it does affect how the stock price is. But as I'm filming this on Friday before the stock market opens, so it opens at 2:30 UK time, and it's currently 12:33. So I did read that with the earnings reports of Apple, Amazon, all the big tech companies, stocks are set to shoot up in a line to obviously they've apparently had good earnings reports. So I could have waited till later to film this, but I wanted to try and get it out of the way now, as I won't have much chance next week to get it filmed. So anyway, we'll go into the stocks now. You can see my first stock is AbbVie. I'm still doing well in AbbVie, up 26.52% with them. Just down a couple of percent, so it's down 2% in the last 30 days. Still think AbbVie probably fair value at the moment if you look at how they've done overall. I wonder if they'll ever get to the highest of £111 again, but since then it's sort of been down to $62, but looking to rise back up again. They're now at 96. So AbbVie still doing well overall, my highest position in the portfolio and probably one of the best performing ones as well. The next one is Verizon. Verizon down 4.71% for me. They're actually up 3.94% in the last month, and up just a small 0.79% in the last 7 days. Verizon and AT&T both reported quite healthy earnings reports, which is good. So that'll affect the share price obviously when the US market opens. The next up we have is Microsoft, another one of my best performing stocks. I'm up 38.42% with Microsoft. Massive blue chip company. Not much movement with them really over the last just a couple of percent maybe overall. Not too much but over the year obviously they're up a massive 45%. So I feel like anyone who bought Microsoft at around the $142 mark will be winning at life right now, as obviously the stock's just gone from strength to strength since March. It didn't take long to recover at all from the pandemic, which obviously is still going on, and I do expect the stock to rise even more due to earnings reports. The next up on the list here is Colgate. Colgate again, I'm up 1.1% with Colgate. Up 4.93% in the last 30 days. In the last 7 days, up 3.43%. So nice bit of growth for Colgate. Overall, we're seeing that they are up over the year, despite the big drop in March, down to $61 now, at a more healthier $76. And overall, they are quite a volatile stock, really. So anywhere probably between $60 and $70, maybe more, is probably a fair value. The next is AT&T. AT&T struggling for me, down 9.55%. Good dividend yielding stock though to have. It's just down a couple of percent in the last month, and in the last, not really much movement in the last 7 days at all. Pretty much broke even in terms of share price going up and down. Again, reported quite a healthy earnings report, so we'll have to see what happens later on today. And overall in the year they're down 13.49%, still struggling a bit to recover. They was around 30, probably a bit overvalued maybe if you look at the total graph for AT&T. maybe slightly overvalued at $37, $38, and now back down to $29. I still do think they're an over $30 stock, but anything under $29 is a really great buying opportunity, I feel. Next up is Coca-Cola, down 1.73% with Coke, but they've managed to rise a decent amount of 6.74% in the last 30 days, but down a further 1.65% in the last 30 days, and this is the last 7 days. But in the year they are down 11.22%. Again, another stock who was doing really, really well, absolutely smashing it on the $59 mark, almost at $60, which I think, yeah, it's the highest Coca-Cola's been. But obviously this happened, and now again, like many companies, they're struggling to sort of bring it back to what they was to the previous glory. So that's Coca-Cola. So the next stock is Starbucks, down 17.36%. Again, reported their earnings report, the revenues fell 38% to $4.222 billion, and the earnings per share is minus 0.046. So that is that is negative, so that is not good. But a company like Starbucks will have the financial clout and the customer service to sort of build back up once everything is allowed to open fully again. I have no fears about Starbucks. As you can see, they are up 4% in the last 30 days despite earnings. And due to COVID-19, they're said to have reported a loss of $3.1 billion in revenue in this quarter. So obviously from April till now, it's been really hard times, but I do feel like Starbucks will be fine again in the future. So in the year, they're down 20%. We can get up to the $96 mark again anytime soon. I don't think that'll be happening, but they are on the way back up. They was down to $56 and now back up to $76. So $20 increase there. The next up we have is Johnson & Johnson. Johnson & Johnson up 5.6% for me. Great stock to own. Blue chip company. Performed quite well. 4.42% up in the last month. In the year they're up 11%. You can see the V-shaped graph that they've had, which they've dropped off a bit from the top of the V, but obviously still up in the year, which is good. The next up we have is Ford. I own 36 shares of Ford still, up 10% in the last 30 days, which is a nice little recovery. Down a couple of percent in this last week though, but overall Ford like they've been on a bit of a climb. And you can see Ford are down massively in the last year, from being a $9 stock, nearly $10, all the way down to $4. But now they seem to be picking back up again, almost at the $7 mark. So next up is Pfizer. Obviously, Pfizer are a good company, good drugs company, up a massive 18.47% in the last 30 days. In the year, they're down just 0.13%. Again, they seem to be recovering quite well. So they could be able to get back to the $40 mark before you know it. Then next up we have is Royal Dutch Shell. Obviously oil and gas have been struggling, but down 7% in the last week, down 10% in the last month, and in the last year down a massive 55%. You can see their big drop, and they've recovered a little bit from that, but not by much. They seem to be very, very still on its way up, down, but now it seems to be a bit more down over the last couple of weeks or so. But again, I don't think oil's going anywhere anytime soon. Same with BP. I do think these companies will be back stronger than ever. So I think the lowest they've been for a long time. The last time they was around this low was in 2016, around to £13.90. Obviously, this is way below that now, and they're at heights of around around £27. So that wasn't that long ago, really, a couple of years ago. Then there was Pepsico. Pepsico, I'm down 5.10%. I own just the one share at the moment. Up 4.11% in the last 30 days. And in the year, they still managed to be up as well. You can see the V graph again. Again, it would have been a good buying opportunity to get them at the $103 mark. That is ridiculously undervalued for Pepsico, I think. And you can see over the last 5 years, obviously, the growth, they've had ups and downs, but the key is with an up, there's been an even bigger, with a down, there's been an even bigger up after it. So good stock to invest in, great company, great dividend yielding company. We're halfway through the portfolio now, guys, so just stick with it. I'll be going through the rest of them now. So the next stock on the list is BP. 35 shares owned BP. down 40%. Again, same follow suit to Shell. They are down a further just over 9% in the last month, and down a further 5.84% this week. And overall, they're down just under 48%. So they got to a low of around £2. Ooh, £2.41. So yeah, they're not much above that at the minute, guys. So next up we have Imperial Brands, cigarette company. I own 7 shares and I'm currently down 13.4% in the last 30 days. And overall I'm down just under 33%. So I think these have struggled quite a bit in the last year as well, cigarettes, even before all of this happened. As you can see, overall there was once a £40 stock, now down at only 13. So we've got some recovery to do Imperial Brands. They're also slashed the dividends, which is never a good sign, but I do feel like they'll be back. As much as I say, people will always be smoking cigarettes, especially if in the near future anyway. Next door, rental income down 8.9%. Speed through this a little bit now. Royal Bank of Canada, they're down 5.85% for me. Obviously, banks struggling in general at the moment all over the world. Getting to that one, go down to Lloyd's and a few other stocks. BA Tobacco down 11.39% for 2 shares that I own. Down 15% again, like Imperial Brands, really struggling. I thought I managed to get them at a good price as well, but I don't think anything was classed as a good price while this was going on. So S&P 500 doing quite well. They are up just under 10% for me. Apple again. Apple, a really good company, blue chip company, but they're down 4.28%. I do expect that to rise today when the US stock market opens, as I previously said. As you can see, but they're still up 5.4% overall in the last 30 days. I think they go off the previous 30 days. I'm not too sure what it is, but they have a revenue of 5.97 billion, an increase of 11% from a year ago, which of this quarter last year, which is obviously good. The earnings per share grew by 18% and generating operating cash flow of 16.3 billion. So their estimated earnings per share was 2.09, but the reported earnings per share were 2.55. So obviously they beat their estimated reports, which is obviously fantastic. The next up is HSBC, down 41.48%, really struggling. Obviously all UK banks providing loans, and obviously just banks get crippled when stuff like this happens with the economy. Obviously they're the go-to guy for the government, so that's all banks have cut dividends for the rest of the year. Intel down 2.64%, and then we get to Lloyd's now. Lloyd's, one of them, down 52%. They've had a 16% drop off in the first half net income, which is down to 7.4 billion. They've also been a provision for bad loans, which obviously doesn't help with dishing out all the money to companies in need, big companies, small companies, and obviously the government as well. Now, the before tax loss reported was 602 million, which obviously is big amount of money. Now could be a great buying time for Lloyd's, so as I think they're the lowest they've been for a really long time. But even over the last year, they didn't get anywhere near this low. And the lowest they've been in the last year before all this, I can't even really tell, but obviously since before the big drop, the lowest it was around 49 pence. Now they're only at 26 pence. So Lloyd's could be a good buy. As you can see, overall they're lower than they've been. Usually I say anywhere between the 50p and 60p is a good, really good chance to buy them. Obviously this is even lower. So next up is National Grid. National Grid up 10%, just 3 shares owned. Wells Fargo, again another banking stock, down 47.67%. US banks will probably be hit worse than the British banks. Not much sign of recovery, down in the month and last 7 days, down 6.13%. And obviously in the year down almost 50%. The last few stocks we have is Carnival. I'm up 41% on Carnival, down 33.54% on Taylor Wimpey. And Greencoat UK up 7.15%. Then the last 2 stocks I'm not even going to get into because I really don't care about them. But yeah, I'll try to make this portfolio update a bit quicker today, guys. Just sort of show you how they're doing overall for me. and not try and go into depth with every single stock, as the videos do get quite long. So yeah guys, that pretty much is the portfolio update today. It's been quite a rough week, but earnings report today for a lot of the major US release date for a lot of the major companies. So anytime such as Apple or Microsoft, Apple, Amazon, when their reports get released, the market tends to follow suit to how they have done. So I do expect maybe a little rise, but we'll see. So let me know what you think of the portfolio update today, guys. There's no activity to discuss today, so maybe in the next portfolio I'll have a bit more to tell you with regards to activity of stocks bought, stocks sold, or dividends. So yeah, get in the comments, guys. Let me know what you think. Don't forget to subscribe and smash the thumbs up button. They really do help this channel out loads. So yeah, on that, I'm going to leave you to it today, guys. Take care. Bye.